Tata Consumer declines after posting first quarter numbers. Revenues and EBITDA came largely in line. However, profit after tax were a mix on account of higher finance costs and depreciations. The Narishco growth also impacted by harsh summers.
Torrent Power zooms on the back of a good performance in the first quarter. The revenue climbs 23% on a year-on-year basis. The net profit jumps 87%.
GAIL is up more than 4% after reporting a strong set of numbers in the first quarter. All-round beat was led by natural gas, transmission and gas marketing margins. Margins up by 240 basis points sequentially.
Dixon Technologies also climbs more than 2% after beating estimates in the first quarter. The management tells CNBC-TV18 that the IT hardware will contribute meaningfully in the next 12 to 15 months. Adds that they are in final stages of closing deals with two large brands.
Titagarh Rail sees a slide after posting a decline in the first quarter business. We have the EBITDA declining by 4% as well. However, the management tells CNBC-TV18 the first quarter was impacted by heat wave and labour shortages, on track to meet margin target and execution target for FY25.
Hello and welcome to Chartbusters. I'm Raj D'Souza. Joining me as always is Mangala Malu. Well, we're very close to that 25,000 odd mark. We're up 70 points. Good recovery from the low point of the day. The mid-cap index, well, that's looking good. As you can see to the top of the screen on top of Mangala Mouth there, that's up close to around 0.5%. And importantly, the Nifty Bank is holding in the green, Mangalam. The big mover today is going to be the Nifty Bank because it plays out the monthly expiry and it's in the middle of the 20 and the 50 DMA.
It's in the middle of that range, Nigel. Let's see where that goes. And on the 25,000 mark, I think we should not talk about it because the more we talk about it, the more elusive it gets. We're about 70 points away.
I've got the T-shirt version.
No, not me. But, we'll just keep an eye out on that. As it happens, it will, because it's not a, function of if, but when. And whenever that happens, of course, we will tell you more about that journey of the Nifty. 25,000 will indeed be very special as just a milestone mark. But let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Today, we have one of our colleagues joining in with a stock that they're tracking.
So today's stock idea is Amber Enterprises, a leading contract manufacturer of RAC and RAC components, having a market share of 29%. The group supplies to leading brands such as Voltas, Panasonic, LG, Daikin, Hitachi and Blue Star. However, following the rollout of PLI schemes, the RAC industry is witnessing a shift with OEMs gradually moving their manufacturing assembly in-house. Hence, Amber has underperformed the industry significantly. To adapt to these changes, Amber is shifting its focus to supplying RAC components and diversifying into non-RAC components. Consequently, the share of revenue from the RAC business has decreased from 72% in FY18 to 40% in FY24. Amber has also entered into a 50-50 JV with Resojet Private Limited for manufacturing of fully automatic top and front-load washing machines. Apart from RAC, it has diversified its electronics PCBA portfolio to various applications beyond consumer durables. In railways, the company's strategic alliance with Titagarh Rail System to venture into the train components and subsystem. That is also going well. The company has received initial orders for doors and gangways. Furthermore, Amber has entered into a joint venture with a South Korean company to manufacture driving gears, couplers and pantographs for various rolling stock. However, the stock isn't cheap, trading at 48 times on FY26 earnings.
All right, that was an idea for profit coming in from our colleague at Money Control Pro, but it's all about earnings. And first up on our radar is Sapphire Foods. The company reported a soft quarter, which was expected owing to subdued discretionary spending and also the date shifting of Navratra, which impacted their KFC business. So to get the outlook going forward, we do have Sanjay Purohit, who's the whole-time Director and Group CFO of the company, joining in to discuss those numbers in detail. Thanks a lot, Mr. Purohit, for joining in. Understandably, the first quarter was weak. Over the last few quarters, we've seen discretionary spends, particularly in dine-in and QSR, being softer. So the question then obviously is, how has recovery in the second quarter so far been, particularly on KFC and at the same time for Pizza Hut as well? Basis what you've seen in the second quarter so far, what is it that you can guide for in terms of same-store sales growth and revenue for the remainder of this year, at least for the India business?
So you're quite right. Overall consumer sentiment continues to be a little subdued. Having said that, we have had a steady quarter Typically, the April, May, June quarter is better than the Jan, Feb, March quarter. However, KFC in the month of April was impacted because of the shift in Navratra dates. And KFC, because it is 95% non-vegetarian, gets impacted the most amongst all QSR brands. However, May and June have been reasonably decent for KFC, and it continues into July. July, August, September typically again is a low quarter for KFC on account of all the festivals that bunch up together. However, in the April, May, June quarter, on the other two businesses, Pizza Hut, we have seen an improvement in performance. After nearly 6-7 quarters of declining ADS trends, we've seen this quarter we've done much better. And Sri Lanka has started to bounce back. We've delivered 11% same-store sales growth. So I would say steady performance in an overall still very subdued demand environment.
So the question then is, what are you gunning for this year for both KFC and Pizza Hut along with Sri Lanka? We're now somewhere in the middle of year. What are you foreseeing for this year in terms of revenue growth and same-store sales growth?
Nigel, I must confess that we don't hand out quarter or yearly guidances on both revenue as well as profitability. But I would assume that I'm not seeing a dramatic change in the consumer demand environment, and therefore we should continue in the same vein as we have spoken about. We should see an uptick in Pizza Hut, Sri Lanka, and KFC post this quarter. We should start to see a little better momentum.
Okay, all right. Hi, Sanjay. Good morning. This is Nigel on this side. Earlier, it was Mangalam who put that question across to you. I wanted to ask you on Pizza Hut. Growing up, if it was a special occasion only, then it was Pizza Hut. That was the kind of quality that we got when we were growing up. Now, talking about that business, it's struggling a little bit. The SSG was a negative number. The margins as well, contracted. What's the outlook from here on? Do you think the worst is behind and we'll see a recovery? If yes, guide us on both these two factors. How do you see the margins recover over here? And also drop in a word on the store additions for the year on KFC as well as on Pizza Hut.
So first, my apologies to Mangalam. I got your names.
No, that's okay. So long as the viewers get the answers, it doesn't matter who asks them.
Yeah. You're so right, Nigel. Even my growing up memory is of going to a Pizza Hut as a treat. I think over the last couple of years, we must confess and wake up to reality that the brand has lost a bit of its luster. And what we're attempting to do is really revive consumer interest back in the brand. And you would have heard me speak a little earlier. The way to do that is to invest significantly behind product innovation, and then higher levels of advertising and marketing spend, and then back it up with outstanding customer service and operations. We started the journey in March when we launched this quite innovative handheld folded pizza called Melts. And Melts, backed with advertising for the first time, perhaps on television, has enabled us to lift the momentum on the brand. I think this is just the start. This is not going to be a silver bullet, and we've got to be at it for the next 1, 2, 3 years at least. From a store opening perspective, we are on track to double our store count from December 21 at the end of this calendar year. So we are still on track there. On Pizza Hut, we have said we are going to be cautious. In the first half of the calendar year, we've just opened 1 store. Perhaps that's not indicative of the total stores that we will open in the next 1 or 2 quarters. So that's the store guidance.
All right. So we've got the business metrics out of the way. One of the things that the street always worries about for Sapphire Foods is the promoter selling. And that exactly has happened over the last couple of quarters. If you look at it right from 2023, where it was close to around 45% stake, now it's come down to 30.8% stake. So the question then is that, are the promoters likely to hold on to this stake, or with the stake that they have right now, does it open the doors for some other strategic to come in?
So Mangalam, this is the first time in the last perhaps 15 months that I've been asked this question by any of our investors. I thought this was dead and buried. We've got a shareholding structure where our private equity promoters have locked in capital over a long duration of time. Today, roughly that shareholding percentage is about 31%. Most people who have exited have been the private equity people, not part of our promoter cap, who have been with the company for 7-8 years. They have exited. Right now, we are very, very stable, and perhaps the best shareholder cap table in the industry. So we've got 1/3 the promoters, 1/3 foreign institutional investors, and another third coming from absolutely marquee mutual fund investors, domestic mutual fund investors. So very sorted on that front.
So will it come down but from 31%, or do you think it'll be stable around here?
Yeah, so like I said, and again, this is in the past, the cap table, there is a certain lock-in amount, which is about 25-26%. I don't think it can ever come down below that.
But that still leaves around 4% of stake to be open to be sold, which is what we are trying to figure out.
Very well.
Okay, all right, Sanjay, we appreciate you joining in and giving us your inputs about the past quarter. We look forward to chatting up with you next time around, and hopefully the pizza as well as the KFC business, both of them, see some recovery from here on. And we'll have to ask you yet again about that promoter stake, if in case there is no action on that front as well. Thanks a lot for joining in.
Thank you, Nigel. Thank you, Mangala.
Thanks a lot. Well, for the time being, we'll slip into a short break. You come back, we'll focus on Jindal Stainless to detail their numbers. Welcome back. Well, let's focus on Jindal Stainless then. The company reported actually a good set of numbers. It was a little bit better than what the street was working with, because in spite of realizations being a little bit weak, that's where the stock started off in the red, but it's recovered considerably. To understand what's the way ahead, Mr. Anurag Mantri, who is the Executive Director and the Group CFO, joins us on the show. Hi, Mr. Mantri. Thanks a lot for speaking to us here on CNBC-TV18. Let's get the two big numbers out of the way. Now, in the first quarter, the volume growth is around 5%. Earlier, you were guiding, I think, for around a 20% volume growth. So do you stick to that? Point number one. Point number two is on the EBITDA per ton. There has been an improvement on a sequential basis, and you had hinted about that as well. But from around 17,000, do we see it move to around 20,000, which you were doing earlier?
So thanks, Nigel. So on the volume growth side, 5%, you are right that, but if you see, we did a best ever sales, highest ever sales in this quarter. So overall, the volume we are seeing, because domestic demand has continued to be strong, and especially in the New York sector, we are seeing a good demand traction. With this, we are expecting that we should be able to achieve the almost 20% of the volume growth in this financial year. This is just a quarter, because and it will also depend on how the export market unfolds at the end of the year, which is H2, which we were expecting. But overall, at this moment, we are okay with the guidance of around 20% of the volume growth for the full year. We are seeing a good traction. If you see, the volume sequentially have increased in this quarter. On your second question in terms of the EBITDA per ton, right? Now, EBITDA per ton, there's obviously last quarter we have seen obviously the improvement, because if you see quarter 4, was more an exception, I would say, because of consistent fall in the nickel for 9 months, and just preceding the 3 months, it was the sharp fall, which had some of the inventory valuation adjustment as well as the sentimental demand adjustment played in the Q4. So we are now recovering from that, and we have done the EBITDA per ton, which because with our, as I keep saying, is that our mix has been very agile, and we take almost 30 to 45 days to adjust to that. And we are seeing that recovery in Q1. So with this, we are now on our guidance for the year is 18 to 20. So I would stick to our guidance that we are expecting 18 to 20,000. Now moving toward 20,000 will all depend how the export market unfolds in H2. But I think the guidance we are sticking 18 to 20,000 at this stage.
So let's talk about the export market itself and the JUSL EBITDA. On exports, it's down from about 17% to about 10%. Mr. Mantri, where does it end at the end of this year? That's point number one. And secondly, an EBITDA driver could also be, how JUSL performs. So what's the guidance for that this year?
Yeah, so Mangalam, export, you are right that we are facing obviously challenges in export because of two reasons. One is because demand is also subdued as compared to the earlier one in US and our key market, which are the two key markets, which are US and Europe. And second is that the Red Sea issue has actually further made it unviable in terms of the very high freight cost, because the freight costs have increased almost 3 to 5 times because of the Red Sea crisis, and the timing has also increased by 3 times. So which has actually taken not much of the export viability at this stage. But we are expecting the Europe is showing some of the uptake and US probably may be showing some. We expect that post US election, we should see some of the uptick in at least at the end of the Q3 and Q4 onwards. With this, we are saying that our export that we should be able to do 10 to 15%. Currently, if you ask me current scenario, I think 10 to 12% looks more feasible. But I think we expect that export should improve in especially in H2, both from US and Europe, and this Red Sea crisis should also come under control. The freight cost and the container availability also sorted out. If that happens, I think 10 to 15% we should be able to target our export mix.
On JUSL
EBITDA, you asked me about JUSL EBITDA. What is your question on JUSL EBITDA?
Yeah, what is the absolute EBITDA?
So absolute EBITDA in this quarter of JUSL was 171 crore, and this had some of the exception item in this quarter of around 15 crore. Normalized level, I think you can say, so normalized EBITDA was around 185 plus crore on this quarter.
So you annualize it, it will be closer to 750 crores for the year?
Yeah.
Or more.
So
I think you were hinting earlier it should be closer to 800 crores, right?
Yeah, so 750 to 800 crores should be the EBITDA for this quarter. There was obviously, as you rightly said, is that because it all depends on how the volumes unfolds and in terms of the tolling charges, because it's a job work for Jindal Stainless.
Yeah.
So some of the, because now based on the certain volume, there was a certain discount which accrued to Jindal Stainless also.
All right, Mr. Mantri, final question before we let you go. You'll have taken an enabling resolution to go ahead and raise some equity. Is it just an enabling resolution, or given the way the stock price has moved? If I'm not mistaken, in the last 2.5 years, it's moved from around 200 to around 800 rupees. And the promoter entity has come there and they've shown their faith in buying from the open market. Is this an enabling resolution, or should we look at an equity raise from Jindal Stainless in the coming quarter?
So Nigel, I think it's currently an enabling resolution, and as we said that, as I mentioned, that domestic demand is growing very in a strong pace, and especially in the newer sector, and we see a good organic and inorganic opportunity. So we need to get ready for ourselves for the future. So we have taken an enabling resolution, and depending on the opportunities, we will see that. But we need to be ready for, because we see stainless steel growth continue to be on a stronger side in the domestic market, and export market should also open up. So we should be ready with our balance sheet, because our focus is actually a prudent balance sheet ratios. So keeping that in mind, we have board has approved an enabling resolution.
Take that point. Thank you so much. We will, monitor the developments out here as they come along and, hold you on to the guidance that you've given us for this year. Always a pleasure speaking with you, Mr. Mantri. Meanwhile, there are some flashes at the bottom of your screen. Nitin Gadkari has written to the finance minister, raised an issue with regards to GST on insurance products. He's suggested asked the finance minister to consider the suggestion of withdrawal of GST on life and health insurance premium. Were that to happen, maybe the street believes that could increase the insurance revenue, insurance volumes in the country, because it's an under-penetrated category, and as a result of which we are seeing an uptick on these stocks. But here it is just a suggestion that is made by Nitin Gadkari to the finance minister. It's a suggestion that has gone in from the Nagpur Insurance Union, submitted to Nitin Gadkari, and he indeed in turn has written to the finance minister. These stocks are higher, but this is just a suggestion. We'll keep an eye out on how this develops. With that, take a short break, come back, get you more on the markets and a lot of stocks which are moving around.
Welcome back. Well, just keep an eye out on the bottom of your screen. Autoline, it's a small company. The market capitalization is only around 210 crores. They won a rather, large order. I think a 500 crore market cap, but I think it's a large order. It just hit the exchanges, so should come up for you on the screen. Not generated too much of wealth in the past, but that's one company that should come up. Well, the markets are in perfect shape, though. You have Torrent, the one that's flying away now. It's up more than 13%. Persistent System as well is moving higher. And Polycab, big move out there. That one, in fact, saw a bit of a correction, but now it's picked up pace again. So some of the big movers. But we'll have to wrap up on this edition on Chartbusters. That's it from Mangala, myself, and the entire team. Trading Hour comes up next.